Hello and welcome. I'm Stuart Craner, co-founder of Thinkers50, the world's leading platform for management ideas. I'm delighted to welcome you to this event from the Business Ecosystem Alliance. The Alliance is a partnership between Thinkers50 and the Higher Research Institute. Our members include some of the world's leading thinkers on business ecosystem and organizations in the vanguard of making ecosystems a reality. Ecosystems represent potentially the best organizational model for the future of organizations. And so the Business Ecosystem Alliance aims to bring together researchers, practitioners, and others who are interested in better understanding how ecosystems work and how they can have a positive impact on organizations, society, and the world. In doing so, the Business Ecosystem Alliance aims to create a mutually supporting ecosystem of knowledge, research, and best practice. We have some fantastic sessions lined up, and some great pre-recorded content is already available on our website, featuring Linda Hill from Harvard Business School, chief strategy officers from major corporations, a revealing case study of ecosystems at work with Hire in Thailand, as well as insights and wisdom from Partha Ghosh, Kayan Krippendorf, Paul Sangeet Chowdhury, Anika Streiber, Amit Kapoor, and a host of others. Our live sessions yesterday and today featured the ecosystem pioneer James F. Moore, Mark Grieven from IMD, Michael Jacobidis from London Business School, Alessandro Di Fiore of ECSI Consulting, the always excellent Christian Sarkar, and Simone Cicero. The full program is available at our website, and recordings of all sessions will be available afterwards. Also, a Mandarin translation of this session is available. Check the interpretation button at the bottom of your screen. On this session, we're delighted to be joined by Carolyn Frankenberger. Carolyn is a professor in strategy and innovation at the University of St. Gallen in Switzerland, where she's also director of the Institute of Management and Strategy and the academic director of the Executive MBA program. Prior to her academic career, Carolyn worked for 7 years at McKinsey & Co. She is the co-author of the Business Model Navigator, which is an international bestseller, now a standard reference work in business model innovation literature. She's also co-author of the Digital Transformers Dilemma. Today, Carolyn will shed new light on how to manage diverse partners in an innovation ecosystem. She's joined by two of her research colleagues from the University of St. Gallen, Andreas Reiter and Joachim Stonig. Our format is that Caroline and her colleagues will present for around 30 minutes, and then we'll have a discussion around her ideas and insights. So please send in your questions at any time. Let us know where you're watching this event from. Please send in your questions, and I'll be sure to relay them. Caroline, Andreas, and Joachim, the stage is yours.
Thank you so much, Stuart, for the nice introduction. So let me share my screen, and then we can take it from here. Okay, so our topic is what makes a good gardener managing diverse partners in an innovation ecosystem. So this is the result of a brand new research project where we really look at how to govern ecosystems, because by now I think a lot of companies and researchers have understood why an ecosystem is important and that we need ecosystems and that the future business model is an ecosystem. But what is not really known yet, how to manage an ecosystem, how to govern an ecosystem. If you are the ecosystem leader, how should you govern your partners? Is it more formal, more informal? How do you make sure that they stay in the ecosystem, and how do you make sure that they're engaged and that they, together with you as a lead firm, kind of create new value propositions? And therefore, we did an intensive study, and the results are kind of brand new, and we are more than happy to share them with you today. So let us get started. So, sorry. Okay, here we go. So just as a short introduction, although you're all experts in ecosystems, just to make sure that we are all on the same page. So most industries have been turned upside down during the last decade. We all know that, mainly driven by digitalization and by new technologies that are available. So what happened? Due to digitalization, companies were able to collaborate more effectively and efficiently than ever before. So as a consequence, companies started to collaborate with other companies, not necessarily only within their industry, but also outside their industry, and also across continents and industry boundaries. I already mentioned that. And just think of a few examples. The mobility industry, for example, it's not about the automotive companies anymore that sell a product to a customer. It's about an entire mobility ecosystem where the automotive producer or the OEM is only one partner, but then you have insurance companies as part of it for the new electric vehicles. You have the whole charging infrastructure that is necessary. You have all the providers that kind of offer shared ride services. So this is an entire ecosystem, and this means we really need to understand how to govern such an ecosystem in order to create value altogether. So what is going on in the industry? And all over the place, we see that there's a trend from moving from product to ecosystem-based business models. So in the past, which is kind of illustrated on the left-hand side, we kind of sold isolated products. Also, our partner Hire, who's part of this ecosystem, was used to kind of sell products such as washing machines, dryers, ovens, etc. And then you sell it to the customer, and the customer uses the product. And at the end of the lifetime, the product is kind of thrown away, and then you buy a new one. But today, we are more and more in an ecosystem, also in this industry, so that you do not necessarily only sell the product, but you sell the product together with an insurance, and you maybe also give the customers the possibility to give back the product so that you can reuse them again. So it's also tied to sustainability. So there are a lot of possibilities and opportunities that we do have with this new trend of ecosystem-based business models. And this can be seen in a lot of industries, and also in the banking industry or the finance industry, which was the focus of our research. So there you can also, the finance industry has been disrupted and still is disrupted. In the past, banks were used to kind of have their monopoly more or less. There were kind of few dominant banks in each country, and they did sell the credit cards. You could get a bank account with the bank. You could get your credit for buying a house or for financing your company, etc. But throughout the last years, a lot of fintechs kind of emerged, and those fintechs are more agile. They can offer similar services, but in a more agile, more customer-friendly way, so that it gets more and more difficult for the conventional brick and mortar financial institutions to really create the same value. So this is a very interesting industry, and therefore we thought this is an interesting industry to study, and therefore to analyze how to best govern an ecosystem in order to stay successful. So we said, due to this trend and to the shift from product business model to ecosystem-based business models, traditional banks are under enormous pressure. So because the core offering is not sufficient anymore, as I said, you have the fintechs and you have players who offer better value, and therefore traditional banks need to move. And what they started to do is to engage in ecosystems as well in order to offer similar services than what the fintechs try to offer as well. But then a lot of banks approached us and said, yeah, how can we kind of lead an ecosystem? How can we govern the partners? How can we make sure that the partners do what we want them to do and that they create value together with us? And therefore, these were the questions that we always heard when we talked to companies, especially banks in that case, that they said, hey, which partners do I need to approach? What are the right partners that should be should be inside the ecosystems, and which ones are the partners that should be outside of the ecosystem? How do I define that? And then also the other question, how should the future ecosystem value proposition look like? What is the value proposition of the new ecosystem? How is it different to the value proposition that we offer today? Then also how to govern the partners. How can I govern the partners, although I don't really want to govern them too formally, because it's this ecosystem and we all are allowed to contribute and to create value together. And then the last one, what should be the basis for the collaboration? Are there any formal contracts? How do I need to set that up? So there was a lot of uncertainty among the partners how to really do that. And therefore, we thought this is a very interesting study to do, which is interesting academically, but also interesting for practitioner world. So the major question then that we focused on is the following. what makes a good gardener? So how to manage diverse partners in an innovation ecosystem. And we'll explain in a minute why we use the gardener analogy, but just a quick hint. So if you are a gardener, you have like different plants in your garden, and each plant needs to be treated in a different way. So some need more water, some need less water, and kind of based on this analogy, or you can kind of think about what our results can look like. But now I'm happy to hand over to my colleague Joachim, who will guide you through the next slides.
Thank you. So let me just elaborate a little bit on what makes our research setting in the banking industry so interesting. So on the right-hand side, you see some of the examples that we studied in this system. So all major ecosystem initiatives of large European banks. So, and what they have in common, they all created a really new value proposition for the customer. So, for example, the retail banking ecosystem was focused around providing everything a customer needs in terms of finances out of one hand and accompany the customer. Or the housing ecosystem really is all about helping a customer from finding a home, buying it, financing it, insuring it, furnishing it, moving. So creating all of a solution for the customer that hasn't been there with the traditional products like mortgage accounts, checking, savings, etc. And because that is such a complex value proposition and you need lots of integrated activities for that, all banks had to create a structure of activities that requires the contributions of many partners. It's not, they couldn't do or couldn't provide that value proposition on their own. And finally, those partners are obviously independent firms, not directly controlled, but interdependent. So all of their activities together have to create a solution that is worth more than the sum of the parts. And so the big question is, if in this very customer-centric collaboration of independent firms, how can we coordinate the very different elements of this value proposition and all the partners behind it so that it is one solution? And so the lead firm, our banks, had to create some rules of engagement for these firms to make the ecosystem thrive. And this resembles very much the role of a gardener that has to create ideal conditions for growth with the soil, with the fertilizers for many plants to grow. But these plants obviously have to fit together, create a nice image for visitors. And the gardener also doesn't want to spend too much time in the garden and then too much attention, because either too little attention and you have lots of weeds coming up, and too much attention, you tend to overwater your garden and maybe kill the plants as well. At least that's what happens to me a lot. So first of all, we can study or could say, don't established approaches to collaborate with partners help in this situation as well? Why do we need new research on that? So on the left-hand side, we can see that we know that firms have for long times collaborated with partners to create innovation. So they have created alliances, joint ventures, sort of between different firms, sometimes in triangles. But usually this is a very individual approach, because you have to resolve innovation and relationship problems. And apply to our situation, the traditional multi-partner innovation projects, they have the benefit they are tailored to the situation, to each partner, and they're quite good because it's relational. You spend time with it at managing the tensions that can arise, or the dynamics. But at the same time, if we look at such a complex innovation ecosystem, a new value proposition, with many partners, we're not talking 3 or 4, we're talking about 80, 100, 1,000 partners. This would mean substantial costs if you tailor each relationship to each partner. And in addition, this is hardly scalable. And when we talk about ecosystem, we want to achieve network effects, really this surplus. And to overcome some of these drawbacks that I just mentioned, really digitalization has enabled a new form of collaborating with many partners, what we call platform governance on the right side. And here you really standardize the governance or the relationship with many partners through application programming interfaces, framework contracts, and this makes partnerships really scalable and with, at least in terms of marginal cost, very low cost governance solution. However, one size fits all, sort of the one platform rule might not fit all of the partners in an ecosystem, especially when we talk about, like in our housing ecosystem, we talk about financing organizations and real estate brokers. How can you have one governance approach for both of them? And there also might be quite rigid conditions that are hard to evolve. So we feel that neither approach fully reflects the reality of these banks, and they had to find a new approach to govern this diverse innovation ecosystem.
Somehow it's not working. Here we go.
Yeah. So what we observed that our banks developed to manage these complex innovation ecosystems are governance tiers. So they created different groups of complementers, sort of sorting them into shelf tiers or sort of spaces, and governing them accordingly. So you might think that sounds intuitively easy. You create different tiers for different partners. It has been done in the automotive supply chains by degrees of separation from the original equipment manufacturer, or you could just say, okay, we have different types of firms in the housing ecosystem. We have real estate brokers, they are one group. We have financing, they are one group. So just sort them by industry code or else. However, it is not that easy or not that straightforward to create these complementary tiers, because really what we observed that the banks created these complementary groups according to the role of the partner for the ecosystem. And this role can either be to explore together, to innovate together, to make the ecosystem new and better, or to just collaborate with the partners to access complementary resources for an innovation that the lead firm already has in mind. So it's really about the role of the partner in relation to the ecosystem. What do you need? Do you need it to innovate? Do you just need to access resources? And Andreas will elaborate on the steps that we observed and a little bit more on how to really create a governance ecosystem that fits the different partner roles.
Yes, thank you, Joachim. Now that we have learned what is missing in the current governance debate and how our research wants to contribute to that ongoing discussion, let's now take this one step further and discuss how this can be actually translated into practitioner insight by asking the question how to successfully set up such a tiered governance structure in an ecosystem with many partners. And that's the question we asked ourselves in order to develop a guideline for managers who are actually in charge of ecosystem management and governance. And based on the research we did and the many interviews with experts and managers, we found that the best practice can actually be structured along 3 major steps. And in the following pages, I'm going to explain each of these steps in more detail. So the first step is what we call identify the blind spots in your ecosystem value proposition. Before I explain what that means, let me briefly discuss what we mean by value proposition. So the value proposition in an ecosystem is basically the idea of who does what, right? So the tasks and activities that need to be done in order to realize the ecosystem and to bring it to life, right? And in our research, we distinguish between elements and activities of the ecosystem value proposition that are super critical and essential for the ecosystem to exist. And we call these elements of the ecosystem core. And on the other hand, activities that are also somewhat important, but not super mission critical for the ecosystem to be realized, and we call them activities in the ecosystem periphery. And very interestingly, in our research, we found that not all elements of such an ecosystem value proposition are equally certain or uncertain, because as a lead firm in charge of ecosystem build-up, you might be very sure about some elements of your future ecosystem, while other elements might still be somewhat vague or uncertain and unclear to you, right? So the level of uncertainty with regards to the future ecosystem value proposition will actually depend on firms, on the lead firms' prior knowledge and experience in that specific domain. So depending on the starting point, the uncertainty with regards to the value proposition relates either to the core elements or peripheral elements of the value proposition. And to make this a little bit more concrete, let's look at two concrete examples here that we've shown on this slide. So on the left-hand side, you see the Deutsche Bank, which has its blind spots in the ecosystem periphery. So why was that the case? It's because they envisioned an ecosystem that was built around the existing product business, right? So they wanted to start with their existing banking business and add complementary products and services to their existing business in the ecosystem periphery to slowly over time move from a product to an ecosystem-based business model. And because their current business also formed the heart and core of the new ecosystem, they were very familiar with everything that was going on in the ecosystem core. But all the things they added in the periphery were new to them, right? The additional services, for example, tax advisory services or a lease manager or travel insurance that could be accessed through the online banking platform. That was not just new for the bank, it was also new for its customers. So they were very unfamiliar with that and had a certain degree of uncertainty with regards to these new products and services in their ecosystem's periphery. But we see a totally different picture if you look at the right-hand side, at the ING case, because their blind spots were in the ecosystem core. Why? Because they envisioned a different ecosystem. They wanted to build an ecosystem around a very specific customer journey, namely housing in their case. So unlike Deutsche Bank, Deutsche Bank, which started from their current business, the ING focused on a very specific customer journey, the heart of which was unrelated to banking, right? Obviously, housing is very different from banking, so they were not the experts there, and they're dependent on strategic partners who developed that heart of the value proposition together with them, right? So depending on the starting point and the envisioned ecosystem, the lead firm, here the banks in our case, were more familiar with either the core elements or the peripheral elements. And we found that reaching clarity about the blind spots is a really necessary precondition for the lead firms to then decide what are my partnering needs and what are the required activities of partners to make that ecosystem grow and succeed. And you will see that on the next step. So the next step you see here is what we call identify the partner's role in the innovation ecosystem and then group them into tiers. And the guiding question in this step for firms was really, now that we know where we have our blind spots, where do we need partners to actually engage with us in explorative innovation to resolve that uncertainty? Because obviously in the domain where the lead firm's uncertainty or blind spots are located, there they needed partners to engage with them in some kind of explorative activities and help them resolve that uncertainty and get rid of the blind spots. So for example, on the left-hand side, the Deutsche Bank, they were, as I said, very certain about the elements in their ecosystem's core, the banking elements or bank-related product offering, because that's something they've done for the last 100 years, right? They were experts there, but they were uncertain about the new additional products they added in the periphery. So they needed these partners to bring some willingness and some flexibility to explore and innovate together with them to really try out what does work, what does not work, what do customers like, what do they don't like, how can we tweak and change the offering so that it's going to be successful in the online banking platform, right? On the other hand, ING's blind spot was in the core. So they needed these partners to bring some kind of flexibility and willingness to explore together with them to resolve the uncertainty in the ecosystem core and get rid of the blind spots. And for all other elements of the ecosystem value proposition, where the lead firms were already very knowledgeable and where the uncertainty was low, they required the partners to engage in a somewhat reinforcing role. They needed the partners to deliver some pre-specified product or service for which no prior exploration was needed, or at least to a very limited extent. For example, think about removal services or painting services. You don't need to really explore with these partners before you can add their offering to the ecosystem. It's just more or less a standard product or service that can be just plugged into the ecosystem and then offered to the customers. And by doing that exercise, by considering what our partners' actual role in the innovation ecosystem, partners were also grouped into distinct tiers by either contributing to the ecosystem periphery or to the ecosystem core, and by either engaging in a more explorative or reinforcing role. And the second step of really reaching clarity about what partners are contributing and how they could help to resolve the blind spots that are there was really a necessary intermediary step to then, in the third and final step, create a coherent governance approach for each tier group. And it's really this last step here that brings everything together that we have discussed before, because the governance, first of all, needs to match the uncertainty underlying the value proposition. But even more importantly, the governance needs to support Complementor's role to either reinforce or explore elements of the envisioned ecosystem. So in other words, the governance really needs to help the lead firm to get rid of the blind spots that we discussed and identified in the first step, right? And both our case firms here, they both found a very good approach to really match their governance to the distinct tiers. And by doing that, get the best out of each partnership. And as you remember, the Deutsche Bank, they had their blind spot in the periphery. So they were uncertain about the new products and services they added. So what they needed as a consequence was a relationship or a governance setup that allowed them to explore that space with their partners. So they found the best ways to support that explorative role of their ecosystem tier in the periphery was to set up an informal explorative partnership with these partners that really allowed joint problem solving, joint brainstorming sessions, and flexibly try out new things. On the other hand, in the ecosystem core, they were very familiar. They knew right when they started what the partners needed to deliver, what the tasks and responsibilities of partners needed to be. So they, as a consequence, were able to set up a clear formal contract, clearly specifying partners' tasks and responsibilities, right? And if you look at the ING case on the right-hand side, we saw the opposite pattern, right? Their uncertainty was in the core. They were not familiar with the heart and core of a housing customer journey, so they needed a setup that allowed them to collaborate with partners and explore that element of the value proposition. So they found the best way to support that explorative role of partners was to set up some form of joint venture, which allowed them to move into co-leadership with strategic partners. And they set up very informal governance approach that really helped them to flexibly explore that uncertain space and explore what's the best way forward, what they should do next, and how the concrete details of the value proposition should be designed. On the other hand, in their ecosystem's periphery, their uncertainty was low, right? They knew exactly what they wanted to offer and what partners needed to do. So again, they were able to set up a formal standardized contracts with these partners that really allowed them to get what they wanted and reduce the governance costs that Joachim mentioned earlier, right? So think about the insurance services or the relocation service or the broker services, right? You don't need to have a tailored contract with each broker. Just set up a formal standardized contract for brokers, and all the brokers going to have more or less the same contracts. And this way, they were able to really tailor the governance to the specific needs of each tier group across their ecosystem. And to go back to the picture of the gardener and to sum it up a bit, It's similar with in case of a gardener, or at least a good gardener very often knows exactly how to grow a plant or grow a flower, right? And he will know exactly what he has to do, and he will then be able to write up clear instructions or a recipe, in our case a contract, that you could then give to a colleague who could do exactly that, right? But in other cases, when he tries to build a new flower, a new plant that he is unfamiliar with, a very exotic flower, if you will, then he might not have that prior knowledge, and he will not have that instructions ready, and he might himself need to explore how to go about it, and he might even need other partners, strategic partners, with whom he can then find out what the best way forward is and how such a instruction manual or recipe could look like, right? And similar in our case, a good gardener, a good lead firm really needs to consider, where do I have my blind spots, and what do I need partners to do? How can they contribute to my innovation ecosystem? And what's really the right governance approach to best support their role? And with that, I would like to hand it over to Carolyn, who will sum it up and conclude.
Thank you very much, Andreas. So just summary and conclusions out of this in-depth study. So, okay, in order to govern an ecosystem, you need to follow the 3 steps. So first of all, identify the blind spots of your ecosystem value proposition. Second, identify the partner's role in the innovation ecosystem and group them in tiers so that you can govern them in a similar way. And then step 3, create a coherent governance approach for each tier to effectively leverage the power of your partners. And therefore, so what, following a tiered governance structure can help you to be a good gardener in growing an ecosystem. So hopefully that was interesting for you. This is us. If you want to also learn a bit about how to implement ecosystems and how to manage the different cultures when you have an existing business model and a new business model, we also did a huge research project on exactly this, how to manage the dilemma between the core and the new ecosystem. So this might also be interesting. With that, I want to give back to Stuart and open up the floor for questions.
Yes, thank you, Carolyn. Thank you, Andreas and Joachim. Please send in your questions. Really interesting research about the nitty-gritty of ecosystems. It strikes me, is there a kind of process in the development of a concept that it starts with the advent of the idea, say ecosystems, and then the second stage is exploring how the governance of the idea, and then the third stage is the exploitation of the idea? Whether, I'm sure there's research been done on that. That was just an observation, really, rather than a question.
Yeah, sure. First, you need to develop the ecosystem. You need to create the ecosystem, and then when you have it, you need to think about the governance. But ideally, you would also start thinking about how to govern it when you create it, because this also depends which partners you want to get into your ecosystem and how to best do that.
But I suppose that's the chicken and egg question, isn't it? Do ecosystems simply evolve, or does their development always have to be managed in some way? Do you need, and I think, can't we accept that ecosystems bring with them a certain degree of ambiguity and complexity, and you have to live with that?
Mm-hmm. Yeah, to some extent they evolve for sure, because you kind of see, okay, which companies work together and what makes sense also in order to create a better value proposition for the customer. But then at some point you also need to see how do we manage the ecosystem, because if you just let it go kind of, and then what is then the purpose of having an ecosystem? Then it would just be a collaboration between different companies. So an ecosystem, at least for me, is something where you really kind of then also have different governance structure and mechanism and a different form of, we are part of an ecosystem, we kind of work together, we have different contracts, rather than just that firms are collaborating with each other, which, but it's an interesting question, which you could also say is it just evolves, and then you have this ecosystem, and then just firms collaborate more with each other than with other firms, and this can be labeled an ecosystem. We were focusing more on it somehow evolved, because then you have, for example, this housing ecosystem, and then insurance companies want to be part of it, then, I don't know, a painter wants to be part of it, then an electric company wants to be part of it. So they want to be part of it, but still you need to kind of see how you want to manage the interaction with those companies.
And even in the most sort of evolutionary and open or less managed ecosystems like Wikipedia or open development, open source communities, you notice that soon some level of governance or management evolves. You have moderators, you have some sort of control and management, because otherwise you often have sort of a you derail into some aspect. So there's definitely a continuum between more management and less management, but completely without management, I don't think ecosystems can be successful, because in the end there needs to be some coordination. It is the ecosystem does something for the user or the customer.
And just to add on this, some ecosystem concepts do only work if they are well coordinated, because the individual components or the complements actually need to be co-specialized to a certain degree, right? And very often that co-specialization does not happen by accident. It happens because there is some lead firm or orchestrator who really pushes the other players, gives instructions, and sets rules and standards that brings everyone forward and helps to evolve into a certain direction. Otherwise, if everyone is just doing whatever he wants, it's very unlikely that the entire ecosystem is moving into the same similar and efficient direction.
I think the idea of an orchestrator is interesting, but we're in danger of mixing the metaphors with the gardener. But isn't that heart of your research and kind of the question about ecosystems, the relationship between small entrepreneurial companies, not necessarily entrepreneurial, but smaller companies and larger companies? And they've always had an uneasy relationship in that they're smaller companies, more entrepreneurial companies, their appetite and resources to deliver governance is much more limited, whereas larger companies have greater enthusiasm and resources to pursue governance. So the banks you talked about obviously have a great appetite for governance, but small companies they might be partnering with or in the ecosystem with less so. It's a difficult, you've got to bridge that divide somehow.
So you would say that large companies have more appetite for governance than the smaller ones? I don't necessarily think so, because even if you have like a lot of small companies that kind of join an ecosystem, someone needs to kind of govern this ecosystem. It's not necessarily dependent on the size, that only the large companies, obviously they are more inclined to do it because they are used to kind of govern kind of their suppliers. But even if you would only have startups that kind of join an ecosystem and would create a new value proposition together, you need to define some rules of governance, how to interact, how to come up with new value propositions, who does what, and how do you want to create something new together, because otherwise it's very fuzzy and not really structured, and then you will probably never achieve the intended goal.
I mean, I think what about the role of trust in ecosystems? Because I mean, there's a lot of in discussions of ecosystems, there's lots of talk of abstract terms like trust and working together and mutual collaboration, etc. Where's the dividing line? Because you can't legislate, or governance doesn't cover trust. There's limitations to governance, I guess, is what I'm saying.
I would say that trust is actually one part of an informal governance mechanisms, right? Trust and mutual vision, mutual beliefs, and a joint vision can help to align partners as well. And we found that informal governance is actually a very important mechanism to incentivize and manage partners. And very often it's something that complements or even replaces more formal mechanisms. For example, in ecosystem domains where you have a high uncertainty and you yourself don't really know how to move forward and how the details of the value proposition need to look like, you're actually unable to set up a formal contract specifying the details about the tasks and responsibilities of partners, right? Because that's something you need to explore first. You need to first find out how things should actually look like, and only later can you then draft that into a formal contract. But in the initial stage and in the exploration stage, you need a trusted partner with whom you can, exchange knowledge and capabilities on a trusted basis to actually explore that unknown, uncertain space. So I think trust and informal mechanisms in general are actually a really important part of ecosystem governance, because more formal mechanisms are often not available, too costly, or just not feasible.
Yeah, I mean, I think your research also raises the issue of the nature of contracts, in that we're seeing greater contracts used to be rather wordy and passive and legalistic, whereas I think we're moving to more dynamic understanding of what contracts need to be in ecosystems. Exactly,
we touch on that because we also ask the question, how important are contracts really? Do they only have a minor role because such informal mechanisms that I mentioned become increasingly important? Does that mean that the formal contracts becomes less important? And part of the answer we found is yes, that's the case, because for some partners, the informal mechanisms, the trust, the mutual values, the mutual vision about the future ecosystem that partners want to build together is much more important than what's written in a formal contract. Because in the end, you want the strategic partners who engage in exploration with you, you want them to believe in the idea and to move forward with you and to innovate with you to really build that new value proposition. And it doesn't really matter what you wrote down in a formal contract, because the formal contract, the only reason why you want to pull out the contract is if you find out yourself in court, right? But that's a place you don't want to end up, right? So what's actually for the daily collaboration, what's much more important than the formal contract is how you can engage on a trusted collaborative basis with partners. So to answer your question, yes, we found that the relative importance of formal contracts decreases in relationships where you need such an explorative partnership.
And even in cases, if I might just add on that, where you don't have enough trust and everything, it sometimes doesn't make sense to establish a contract, because even if you end up in court, you cannot really enforce it. It is years later, or it takes so much time to establish it. So some firms told us we have stopped doing real contracts because we know we cannot enforce them. So why bother? And just being more innovative, being ahead, being faster, so that you're really in a lead role, not because of legal and pure force, but just because of your ability is key in ecosystems.
Let's not involve the lawyers too early in the process, I don't think. There was a good question from Ank from the 42 Collective in the Netherlands. Is the ecosystems approach really different from partnerships and alliances within the two banking examples you gave? The 3-step approach is also applied for partnerships and alliances.
Maybe Andreas,
I can go first, and maybe Joachim, you add on it. So one issue we have in the general ecosystem discussion is not just in practice, but also in research, is that everyone says it's something new, right? Ecosystem is a new form of collaboration. It's a new form of governance. But often we forgot that we already discussed alliances, governance in alliances, governance in innovation partnerships already in the past, but just from a different angle and probably or with a very different heading, right? But we already researched collaborative partnerships and governance within partnerships. And many things we have learned in the alliance literature and in the alliance governance also applies to ecosystem. It's not that all these things are not do not count anymore, but in ecosystems, it's not just one type of alliance, it's different types, right? In the literature, we talk about a continuum ranging between hierarchy and market-based relationships, and the relationships within an ecosystem are not completely hierarchical because they are independent firms, and it's not a purely market-based contract because there needs to be some co-specialization and alignment between the partners. It's somewhere between, and somewhere between these two poles, you have alliance-like relationships that resemble some aspects of traditional alliances, but also some new, more informal aspects as well that we already touched upon. So all those traditional alliance-like governance knowledge is not obsolete, but it just needs to be updated and adapted to an ecosystem context. That's what I would add to this.
And the key reason, as you said, is standardization and scale. Just, I mean, all the elements obviously apply to uncertainty, applies to alliance, exploration, exploitation applies to alliance, but the scale with hundreds and thousands of complementers, this hasn't been seen before as such.
Brilliant. Just to add, and therefore that's why our study kind of sits in between kind of what we know from platform literature and what we know from alliance literature. And it says, okay, you can still be customized and specific, but you need to do it for groups of partners, like for tiers, how we call it. And then you can scale it, and then you can make it happen for hundreds, thousands of partners. And that's the difference to the alliance literature. And therefore you need the tiers and the groups, but it's also different to platforms where you standardize everything and all partners just need to follow the same rules. And this is the difference in our study, that is kind of not a platform like the iOS platform. It's not a very specific partnership. It's something in between, and therefore research has not told us how to do that. And this is our approach or our idea to kind of fill that gap and to give guidance for executives how to handle those animals.
Yeah, that makes sense. Comment from Kamal Handor. I really like the analogy of the gardener. I was curious whether in your study you have encountered newer types of contracting agreements between players in the garden. Yeah, I think we can get, the metaphor can overwhelm things, can't it? Is there some innovation being observed in the field of partnering? So, I mean, I think he's asking, in practice, are there many examples of different agreements evolving within ecosystems, I guess?
Yeah, I would say it's not a completely different type of contract, right? It's not that they invented a type of contract that hasn't been there before, but it's, as Joachim mentioned, it's that mix and match of different governance types within the context of a single ecosystem that was really unique, right? So to give you an example, one of the managers we interviewed said that the core partners, when they collaborate with them, they get a 60 to 80 pages contract with which you want to, you know, after you receive it, you want to kill yourself because it's so intensive, and it clearly details what you have to do. On the other hand, the peripheral partners that engage in explorative tasks, they get a 6-page contract, right? So it's just a kind of a contract detailing what resources, capabilities need to be contributed, but the contract does not say anything about the outputs or what needs to be delivered, because partners don't even know, right? So that's part of the process. So it's a completely different type of contract, and the range is pretty huge, but it's not that, you know, they came up with something, with a contract type that hasn't been there before.
Christian Sarkar comments, what about vertical farming? Which might be a challenge for your metaphor, I think. So, and a good question from Tanya. How would you ensure that governance mechanisms don't fix members' roles or placements in the ecosystem in favor of the leader or most successful competitor, and enable a dynamic natural growth or evolution of it? I think that is getting to the question of fluidity and fixity. So whether an ecosystem, how fluid it is and how fixed it is.
Yeah, therefore what our study told us is that in areas where you already know what you want to do because you have done it for many, many years, there you can have a kind of fixed contract mindset interaction with your partner. But in those areas where you don't know what you want to achieve, where the value proposition is not really clear, where you don't know how the end goal will look like, their rigidity or fixed contracts can kill kind of the whole endeavor. Therefore, here you need to have the informal contracts of flexibility. You need to have a lot of discussions. You need to be very agile. You need to be open to kind of inputs from your partner. So this is kind of one of the insights of our study. Yeah, you can be fixed in some areas, and this might help you also to scale and to be faster with the whole ecosystem to build that up. But in other areas where you don't know what you want to achieve and how the value proposition will look like, there you need to be very flexible and very agile. And that then helps you to separate that, to also scale the ecosystem. Because if you would keep everything agile and informal, then it costs a lot of time, and the costs of developing or doing the governance and developing the ecosystems are so high that you then also will not be successful at the end.
Yeah, a similar point comes from Mine Empoyo, who asks about formality and informality in these relationships. And I guess that's the same question, isn't it? How fluid and or against fixed you allow these relationships to be. I mean, I think an interesting question was about your governed tiers, which on the surface at least seems to work against the dynamics of kind of the idea of free-flowing ideas and ecosystems. Yeah, so I think that's a big challenge in people's perception. The governed tiers suggest some sort of hierarchy.
They do, yeah. And this is to say that not all ecosystems, I mean, we have this spectrum of a full supplier, where you have full power over, and really just the market where everybody can come and go, and then sort of the tiers of the ecosystems we observed have different levels of hierarchy. Some are quite equal. Some are more, let's say, have more power imbalance. And then finding that balance is critical. And it depends, as elaborated on, how sure are you about what you want to do? And then there you can centralize, if you know what works and what you want to do, you can centralize more power. If you don't know, you need to work more on an equal basis. But I would say, even though we talk about ecosystems with this metaphor and everybody's equal and everybody has so much freedom, most ecosystems that we observe in reality have some sort of leader and some sort of power imbalance, and to some extent this power imbalance becomes almost unbearable for some of the participants, if we think of some protests of Uber drivers or anything. So it's not that all ecosystems are happy places where everybody collaborates. And then so the tiers reflect a bit this. It's not never full power. You have independent partners, but there is some sort of guidance, and finding that balance of how much to guide and where not to guide is the art of managing the ecosystem.
And that's why we also like the study so much, because it's a bit counterintuitive, and that's why we want to bring it up here, because it's not like, as everyone thinks, it's all fluid, all kind of flexible, and you can just join or leave or whatever, and everyone are happy partners kind of that collaborate. There needs to be some structure, governance, and you need to differentiate also to some extent the partners that you have.
Yeah, I like that. We will quote you on that, Joachim. Ecosystems aren't necessarily happy places. Yeah. Which, I
hope I didn't kill the vibe here. No,
but I think what you're getting at and what your research is exploring, and the questions are coming in about it, because I think it's really interesting, is about power and about the management of power within ecosystems. So there's a question: how do you manage power in ecosystems? And there's a follow-up comment from Christian. Would the concept of sphere of influence be more suitable to describe how power is exercised in an ecosystem? You know, what do you think of that as a term?
Andreas, yeah.
Yeah, it's not. It's
about to say something, therefore I don't want to.
No, it sort of has to do with the tiers. However, usually sphere of influence for me implies something more informal. So tiers are always about governance, about not we said formal or informal, but it's more structured. It's you're in or out. The sphere is something that is more fluid, that sort of usually centers at the core, where you have a lot of influence, and then you have less influence towards the outside. And in our study, we said the sphere of influence sometimes is very the influence, for example, of a housing ecosystem in a joint venture. The bank can have very little influence at the very core of the domain, because there are 3 partners in a joint venture that really have to define what the value proposition is, and they have more influence towards the outside. So
I think how I would see it, the influence is really with those who help to create a value proposition together with the core partner. And this is also different to the world, to the traditional world. They have the tier 1 suppliers. They are the ones who are closest to the core product, and they have the the most influence towards the core organization. But here it is different. It depends on the ones who create the value proposition together with you. They have the power and they have the influence, and they get more freedom, they get more flexibility in how they interact with the gardener, kind of. And that's the difference. And therefore the sphere of influence comes from those who create the value proposition together with the core organization, to put it that way. And it's different from the how close they are to the company per se, because as we saw in the Deutsche Bank example, the ones who were very close to the core organization, they had less power in that sense, or less influence, than the ones who were more far away from the core organization.
I think what's good about the research, it actually stirs up a lot of debate, a very interesting debate. Christian has come back with pointing out the sphere of influence was a big idea when ecosystems were first discussed, and there's a link on the right hand side in the chat box to an article in the Sloan Management Review. And I think the soft power versus hard power in ecosystems is interesting. There's also Miner's come back to us on building on the fluidity versus flexibility idea. How do we build, for him, the question is, how do we build self-adaptive organizations fit for the purpose of ecosystems? And I suppose that's what you would expect the kind of next stage is of from what you're saying. The governance becomes more nuanced, more sophisticated, and is able to adapt to evolving ecosystems.
Yeah, I mean, just thinking of technology now, we have contracts, written contracts. Maybe sort of these contracts in a couple of years could evolve with some sort of algorithm, or let's call it artificial intelligence, and in some way, at least the more standardized ones, and become even more tailored. And we manage that dilemma between having individual and standardized governance in a technological way.
And where does your research go next?
Well, different areas. So definitely ecosystems and business model. We want to connect, or I want to connect that a bit more. So how can you come from a business model to an ecosystem, and what do you need? What are the activities within an organization that you need to adapt? I also do a lot on sustainability. So how is sustainability related with ecosystem? I think there's also a nice link if you talk about circular economy, for example, which is a hot topic currently, which is per se also an ecosystem. It's a different ecosystem. It's not a platform like iOS, but you need different partners who interact and who create a joint value proposition together. And I do some research there, happy to share that next time, which is also very interesting. And not a lot of researchers are looking into that, because a lot of research is always done on platforms, etc. And I always try to do a bit different things, like here with the bank ecosystem, the circular economy ecosystem, which are topics that are super interesting and especially interesting for organizations, but not that interesting to study, because if you want to collect data, you need to really roll up your sleeves, and then you need to talk to individual executives, you need to do surveys, etc., which is cumbersome, but I think very interesting in order to bring the world forward.
A lot of people have been asking where they can find out more about the research you've talked about. Is it published or available in any way?
It's not yet published, but we are working on the publication. We are in the middle of the publication process, and as soon as it is published, we're happy to share the link with you, Stuart, and then you may want to share it with the audience.
That would be great. So I think, thanks very much for that brilliant session. I think what's really good about this work is it raises so many really important questions about what happens next with ecosystems, how they can their impact can be maximized, and how organizations in traditional industries like banking can really utilize them. So thank you, Andreas, Joachim, and Carolyn, for a great presentation. Really appreciate your insights and ideas. And thank you very much, everybody who joined us today. Thank you.
Thanks, Stuart.
Thank you.
Bye.
Thank you very much.